I mean, we're talking about some major moves in the grain markets. Here we thought the weather rally was all over with, and now this comes in, kind of blindsiding the bears. You have all the Russian action, and that seems to be taking the front stage here. Now I'm hearing that there are, maybe a couple dozen or more ships that have dropped anchor, and they said they won't go anywhere near the Danube now.
Yeah, and you can't really blame them. And we're getting a lot of headline risk from every direction between weather and the Black Sea, and get some demand out there in the soybean market as well. So a lot of things feeding the momentum to start this week's trade, which is nice to see. Looking at corn, the December contract, we were able to take out last week's high, but weren't really able to get any follow through to the upside, which is a little bit of a caution flag. And I think if wheat weren't firming up and trading near limit up, I don't know that corn would have the momentum to hold itself up here. So I am a little bit skeptical and working with a lot of producers here to take advantage of this rally up here. Looking at the commitment to traders report for the corn market, funds pretty indecisive. Net short about 47,000 contracts. That is, for all intents and purposes, very neutral. 145,000 longs versus 192,000 shorts. We'll go one way or the other, but as you had mentioned, a lot of that's going to depend on these headline variables that are coming out day by day.
You know, I remember last week, I believe you and I had talked about the fact that we had reached or breached the 50% retracement level on the corn. And then it backed away from that. And some wondered if that would open the door up to a 62% retracement level, another technical level there. Do you think that's a target now or not? Or has it already taken that one out?
Well, I think that's a target, and the 200-day moving average comes in right up there as well, 575. So if we're able to get out above last week's highs with some conviction, that's, I think, 563 to 566 with the early morning highs. If we're able to close out above there, the 200-day moving average would be the next target, as well as that other retracement, 575. But everybody's got their eye on that, which makes me believe that we might just fall a little bit short. And looking at the demand side, I have a hard time seeing that support prices here, especially if things calm down in the Black Sea or they start to push forward and come back to the table to try to get some sort of resolution there.
Gotta love those Fibonacci numbers. All right, thanks. Sit tight. We'll come back in a moment and we'll take a look at our livestock trade. A lot going on there too. We'll talk about it when we come back.